We're speaking with Jim McDonald. He is the CEO of Kootenay Silver, and we'll be talking about the silver market and future projects and developments of Kootenay Silver. Welcome back to the show, Jim.
Yeah, great to be back, David. It's a pleasure to be here again.
You've got some announcements to make, exciting new drill results that we can talk about. But first, let's talk about silver. Not a lot has been happening this summer. It's been pretty quiet, hasn't it?
Yeah, it's been pretty quiet. You can see that on our silver chart, of course, the price of our stock and many, many other silver explorers and producers. It's all very similar, coming off that real exciting breakout last year from $18 to $30. And we're expecting another breakout to come here in the silver price pretty soon. It's a very interesting action on the gold market there a few weeks ago, when overnight in the Asian markets it was spiked down to 1690 very briefly. That was a real technical hold spot for it. And the whole macro scenario, of course, is very strong for the precious metals here going forward. So we're expecting a big breakout here. Hopefully it's in the near term. The timing is always something that we can't predict, but we're quite confident on the trend.
All right. Well, big breakout. Let's talk about that. Do you have a catalyst in mind? What can spike the price up?
A lot of things could spike it up. A new variant, an announcement on some massive infrastructure bill, perhaps, that will do it. Who knows? There's always some catalyst that happens, and I don't really think it's any given catalyst that makes it happen. It's some event against a bigger macro trend that's in place, and that's what we see now. So there will be some catalyst. Who knows what it'll be?
Well, you brought up the infrastructure bill. That's a good point. We've had the infrastructure bill passed in the Senate a couple of weeks ago. Were you surprised that the silver price didn't really move much on that news, given how much silver presumably would be needed to fulfill some of these infrastructure demands?
Well, no, not surprising. And we're looking at that big trend, and those it's not the type of announcement that really spikes that precious metal type price typically. So yeah, I wasn't really surprised by that. We're focused on that macro, and if it's not something like that, then it'll be some other thing that seems to correlate with and drive the price, and perhaps it actually does, and perhaps it's coincidental. But it's that macro that we're quite confident in on the uptrend.
When you talk about macro, are you referring to investment demand or industrial demand, or maybe both?
Well, silver is pretty interesting. I'm referring to the investment demand here that's been set up because of the massive amount of currency injections that have been done around the world over the last year and a half approximately. Yeah, it's never happened on this scale before, and that creates debasement by purchasing power of those currencies all around the world. And that creates a very strong environment for demand of bullion silver and bullion gold.
Okay, let's talk about the relationship between gold and silver over the long term. If we take a look at a long-term chart of gold and silver, you'll notice that while it is true that during bull cycles, silver outperforms gold, and of course vice versa, during bear cycles, silver underperforms. However, over the last 40 years, it's occurred to me that while gold has breached new all-time highs last year, silver has not yet breached its 2011 highs, let alone its 1981 highs. So why is it that silver over the last 40 years has continuously found new highs while silver has, if you look at the chart, not yet found its new highs? It's traded within that range.
Yeah, well, that's because this cycle isn't over. In our view, we think silver is going to break out over that $30 mark pretty strongly and make a run on that $50 number, and probably surpass it this time, just because of the backdrop it's against. So a lot of people look at the silver gold ratio, and it was about a year ago at an all-time high, almost around 122, and then the last bull market precious metal cycle, it went down to as low as about 30. And the cycle before, I think it was as low as about 15, 16, something like that. So you get these really strong swings, and that's yet to come, we believe. We strongly believe that.
So, Jim, if you talk about the price of silver going up, you mentioned $50. Run up to $50, we have to break 30 first, of course. What is a fair
Yeah.
value of silver that makes sense for you?
Well, I don't know if there is a fair value of silver that makes sense for us. In the last part of the bear cycle for the silver price, there's a pretty strong hold at $15 to $17 on the silver price, and we were able to track capital for exploration expenditures, and what we did was we focused on opportunities that came up because of that bear market and getting into these high grade projects like Columba and Coppolito. And high grade works in any kind of silver price. So that as an explorer, that's how um, you protect yourself. You always want to be looking for those top tier assets, and
Yeah.
high grade always works. So we're able to get into those projects. They're very exciting, and
Hmm.
and the silver price is something we can't control, but we have obviously strong beliefs, as you've just heard me say, on
Yeah.
where that silver price is going.
Can you describe the environment for raising capital this summer versus that of last summer? How is it
Mm-hmm.
different? Is it the same?
No, of course, very different. Last summer, it was just on the heels of the COVID shutdowns. Gold broke out pretty quickly and pretty strongly, and silver was languishing behind, as we're seeing right now, in fact. And then suddenly silver went from 18. We were waiting for it at that time to break the 19 barrier. It was on the chart, looked like that's what it needed to do, and it blew right through that, went shot straight up to 29, 20, $30. So all of a sudden there was a lot of demand for silver in the silver space investment. And this year we seen that price come slowly back off and seems to have found a pretty strong support here at 23, 24 level. And so the interest has died off, but at the moment, and that it's cyclical. That'll change, and when
Hmm.
that chart starts going the other way, then we're going to see another period like last year for investment demand.
Right. And if I were an executive of a senior mining company, a senior gold or a senior silver company, I might be looking at prices and think valuations are pretty attractive. Now is probably a good time to be purchasing some assets. Of course, that's obviously dependent on their overall corporate strategy. But you can't deny that prices have been severely beaten down since last summer. Are you expecting more M&A going forward, especially given how senior miners' balance sheets have been still pretty good despite slightly lowered metals prices?
Yeah, well, for producers, the price is pretty good. They over the last several years they really clamped down on their costs, and so their prices are still pretty good, and the margins are there. And of course, buy low, sell high. That's the strategy Kootenay likes to use. And we got into these Columba and Coppolito projects at a low point in the market, and the opportunity arose because of that bad market. And so, yeah, I would expect to see some pickup in M&A at this point,
Hmm.
and that's typical of what you'd expect to see.
All right, so let's talk about some of these projects first. First and foremost, drill results announcement today. What can you tell us?
Yeah, so we did put out some holes on Columba, and it's a brand new zone, so it's pretty exciting. It's a down-faulted block, which means that it put the mineral system that where the silver we're looking for a little deeper down. You can't even really see it at surface, but from the geologic mapping, we interpreted that it should be there, and we put in about 5 holes into it, and one of those holes hit a real nice high grade intercept over 1,000 grams per ton. So this is a brand new area with a real strong potential for high grade mineralized shoots. Adding to the ones we already have, we've got one area called F vein that we've got a lot of holes into now, and we've got consistent hits over 700 meters of strike length down to 200-meter depth. So we know there's a resource there to be defined with a little more drilling, and we're looking for more of those kind of things. And this is another area that's like that. And we have, in addition to that, we have 3 others. So now in total, there's about 4 zones with look like real strong potential for good sized and grade mineralized shoots. that we're, of course, going to be pursuing now.
Excellent. I noticed, of course, all your projects are currently in Mexico. Are you planning to diversify your assets outside of that country anytime in the foreseeable future?
No, no, we're not. We've got a grassroots exploration program we also run in Canada and British Columbia, and we're seeking shareholder approval to spin those assets out because they're totally buried under the value of our Mexican projects. Mexico is such a great place to be exploring for silver, biggest silver producing region in the world. There's tremendous opportunities there and potential. And so we've been there very well over 10 years. We've got a great knowledge of that country and great human infrastructure. Our team down there is an excellent team. And so we've got a lot of advantages operating in Mexico. We do, however, look at opportunities outside that country occasionally. Yeah. And what we'd be looking for in such an event as that is the size, the geologic potential of the area and the political stability. So we more or less restrict ourselves to North America, I would say.
Well, it's okay. So if you're not planning to diversify outside of Mexico, what is your long-term plan? Give us maybe, let's say, your 5-year plan.
Yeah, so even in a slightly shorter time frame here, we've got some exciting new discoveries we'd like to, and then all backed up by this large resource base. We already have 2 deposits totaling more than 144 million ounces of silver equivalent in the measured indicated category. And so we give a lot of leverage just to the silver price, and that's kind of the stake in the formula. And then the sizzle are these new projects, Clumba and Copalito. But thing is, let's get these advanced to a resource size that could work economically, then do some economic studies to show that they will, and sell those assets to a miner.
Yeah.
And then spin out our remaining assets and take advantage of that team we've built out over the years and look to do it again.
Okay. All right. Well, so your plan is ultimately to sell some of your assets to a senior miner. Now, you're not the only explorer operating in Mexico. Generally speaking, what do explorers like yourself do to make your assets more attractive for a potential buyout partner?
Well, first of all, you've got to have the resource there, and the first step is to identify the potential, drill it off, and prove it. Now you have a resource. Now you need to show the economics, and then you go into your economic studies. And if your economic studies are positive, then of course the miners are going to be interested, depending how strong that return is. But in addition to that, the other things that you can do to add value as you're going is do all your background, your baseline studies, your environmental things, get all your permits in place, get all your land access agreements in place, and every one of those things adds value along the way. Yeah, and it's something that a purchaser doesn't have to do. You've taken care of it.
Right. Now, tell us about the different grades of ore amongst your projects and the difficulties in extracting or exploring or drilling for these ores across the different projects that you have in Mexico.
Well, grade is an interesting thing because high grade is great. However, it's more about the grade is the mining cost and the recovery. We learned this many years ago when I was involved in the Mulatos project, which we purchased, which eventually became Alamos Gold. And we were looking at that deposit then, and it had twice the grade of a deposit in Honduras that was going into production, yet the Mulatos at that time in 2000 was not economic. And it had all to do about the mining costs. It required 3 stages of crushing, which increased that crushing cost a lot, and the recovery wasn't quite as high, so you weren't recovering enough. It bumped. So the bottom line at the end of the day is it wasn't quite economic. It became very economic when the gold price broke 300 later, of course, in hindsight. So that's the interesting thing about grade. We had twice the grade as this deposit in Honduras, but under $300 gold, we weren't making money and they were. They didn't even need to crush. So there's a lot of cost removed. So grade's a tricky thing. Typically, grade is king. Grade takes care of a lot of extra costs you might have to put into it. And so your open pit costs could be, depending if you're leaching, you might be in the $15 a ton range. If you're having to mill, you might be $25, $30 a ton. So at $23 silver, that's about 1.25 ounces you need, which is about 40 grams that you need just to break even. And then you need more to getting in a long discussion here, but to pay for the capital build as well. So it's and our deposits are ranging, like La Ceguera is about 85 grams. The Columba intercepts are incredible. We're getting a lot of intercepts that are 500 to over 1,000 grams per ton, and it's a different style deposit. It's narrow vein, very typical of a lot of the Mexican stuff.
And generally speaking, in regards to exploration, how do you view brownfield exploration versus greenfield exploration? Do you have a preference?
Well, brownfield gives you a big advantage in understanding the geology of the area, typically. And brownfield can have a tremendous amount of potential. Mining companies really love brownfield around their mines because they've already paid for the build of a mine, and so it really pays dividends. But at the same time, green fields can be very exciting and very lucrative if you discover a brand new world-class deposit in a new area. It's excitement that's generated out of that, and the value is an incredible thing.
Well, I presume shareholders might they might prefer maybe brownfield exploration for the purpose that you just stated. It's probably less risky, but maybe greenfield yields higher returns if it really pays off. So how do you balance that out?
The discovery of any nice economic deposit is going to pay off. And the unique thing about Mexico is that you've got kind of a crossover from brownfield to greenfield in a lot of these projects, like our Columba project, because there was some historic mining there over 100 years ago. Or the last activity was about 1960 or thereabouts, and significant activity. So you already know you have something there because they were mining. So it's not quite brownfields, but it's not quite greenfields. You're going in with some real strong knowledge that you've got something there, or potential for something there.
I'd like to close the conversation today with talking about some I don't want to say sci-fi stuff, but I want to look ahead and talk about some technology that could benefit the mining sector. Now, you're an explorer. You know drilling inside and out. What could help you in the process if you could speak to an engineer or a scientist and construct or create new technology that could aid you in the exploration process? What would that look like that maybe hasn't hit the market yet?
Well, there's been a lot of advancements in the geophysical field, mostly due to computer power and what they can do there. Yet there are no silver bullets developed, and I don't know if there ever will be. It's pretty. Artificial intelligence is something that's being employed now. It's got a lot of potential.
What can artificial intelligence do for a miner?
Well, it's it's subjected to the subjectiveness of whoever builds the model on that artificial intelligence, but it can take a lot of data and process it very quickly and pull out those areas that have the features of a large deposit. So it gives you a bullseye of where to go. So particularly in regional exploration, if you have a lot of data available to do this with, you can run it through a good AI program, and then come up with those areas on that map that have the best potential according to the parameters you're looking for, characteristics you're looking for.
Yeah. And the physical drilling itself, has the industry made any advancements on that front over the last 50 years?
Yeah, it's basically very similar to 50 years ago, but the advancements are on the computerization. It's just like your car. The steering in the car now is phenomenal because of computerization, and drilling is the same.
Okay, excellent. Well, I look forward to speaking with you soon again, and we'll both be at the Beaver Creek Conference, so we'll speak to you again then. Thank you very much for coming on the show today.
Okay, you're welcome, David. Pleasure to be here, and look looking forward to Beaver Creek and more drill results.
Absolutely. And thank you for watching Kitco News. I'm David Lin. Stay tuned for more.